Good morning. Good morning. Good morning. Happy new week. And let's see where we're at here. As I looked at things over the weekend, I kind of came to the conclusion, and the video that I did in the letter was to explain what was happening now is just kind of being a mess because of the misalignment of what's going on here. And of course, it happens. It'll resolve itself. We'll see which way things go. And part of the reason it's a mess is because of course, the news, but the way prices came down from the high, meaning, the weekly's in an uptrend in the majority of indices. The Russell and the transports aren't. We'll take a look, but so we're looking at the S&P. They're in an uptrend, and we got a bottoming tail bar within an uptrend, and that suggests the move higher. However, the way it came down is not, let's just say, normal for a bull market type of retracement. Meaning, even this angle of retracement is a little steep versus, okay, let's say the most bullish correction was just sideways here after the move up. And so you got, an angle of retracement here and here and here toward the 20, and here the most bullish after the move up was sideways. So these are normal type of retracements during a bull move. Clearly, this is not normal, and because it's news driven. So the news that drove it lower isn't resolved. So we have to keep an eye on the exit, so to speak, even though we've got a low put in place with those bottoming tails that attempted to get toward the 200, and they didn't. So that's a positive, that it didn't go all the way down there, that buyers stepped up ahead of the obvious reference point right here, and there was nothing to the left where they stalled. And you can see, of course, the angle of retracement as it came down here on the weekly time frame with one big red bar. The biggest, in any of these. There haven't been many red bars, and that in of itself is a bullish picture. So, do prices get above the high of the bottoming tail bar? Looking at the weekly, do they get below? Do we spend this week trading inside, waiting for news, whether it's earnings or, a new tweet, whatever it is? This is a picture of uncertainty, and what has to happen after such a range expansion and drop like that is some range contraction and the volatility to contract, and we get more information to guide us as to the probability of where prices are going. Now, this in itself, we could say, well, the trend is up in the higher time frame, it's going to go up. And I hear that. But after a drop like this, you typically don't get the 2-bar reversal and back off to the races. You get a little bit more chop, maybe a retest, as that extra time of trading brings in that certainty and confidence that we're not going to get a collapse based on this kind of price action. So I think it's going to be a little tricky here till the markets get some more information to digest in order to see that, hey, the next raise in tariffs isn't coming, or next currency devaluation, or whatever it might be, or positive. The Fed comes and says, hey, you know what? We should have raised it 50 basis points. So here's the other quarter, and probably the markets would like that, and we could see prices go up. But right now we're looking for some more information. And so now, with Friday having been an inside day, let's see if prices can either get above Thursday's high or go below Thursday's low. And regardless of whichever way it goes, unless we get some real news catalyst, I would say, well, the 20, which is in alignment with that minor support, these overlapping bars right there, would be the initial upside target. And down here, it's kind of hard to say, but I suppose, this area would be where it would go down toward, down toward here. So waiting to see here how things shape up. We'll take a look at the futures, but as I go through this, kind of leads me to more of a wait and see to gather information in which way this thing goes for the moment. Qs, similar story here. They're kind of just drifting down toward the prior low at this point, but same drop, change in personality from what was super bullish, 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 bullish. And here we know the wrong way option traders just loaded the boat with call options, expecting the markets to explode higher. And that's always a sign of potential trouble when those people just lean on one side of the boat, so to speak, and believe that the market's a no-brainer, and using the leverage of options to profit from it going up. Once in a while they get it right, but you never want to be on the same side with that group. Historically, it just doesn't work. Well, it doesn't work out for them, let's put it that way. So the transports have been a laggard, and they came down hard too. They recovered last week, formed a bottoming tail bar, but didn't get above its opening price. And so, a pattern of distribution here that has not been confirmed, meaning there's been no breakdown. It's trading within the range of, that low and that high. And which way is it going to go? Well, similar to here, which way is this going to go? Excuse the green line at the top. But anyway, we've got Thursday's high and low as a measure of at least, hey, if it can get above here, let's, for the day, look for prices to go higher. And if it drops below here, well, the assumption is it breaks here and maybe even lower from there. So not an easy picture at this point. Russell, another inside day. Similar story with the drift back, the distribution pattern, still within a range, big drop. So similar message across the boards here with the transports and the Russell lagging as they typically do. And this time they're not playing catch up, where they certainly look like the Russell was ready to blast higher and would have taken the markets higher, and was just a fake out move over here, and down it went when that news came. Looking at the futures, well, they started last night up a little bit, really neutral, but they kind of gave it up here. They're trading below actually Friday's low, but again, you can see Thursday's high and lows pretty big. So really not going anywhere here. A new trading range coming down to some support, bouncing up here a little bit. So we don't have a void, buyers stepping up at the obvious place. Now we've got this resistance overhead, giant big bottoming tail, the same story with the giant angle. When prices entered into the void there, they just collapsed, and, they pushed down through the 200, didn't come down to the prior low here in June, but got pretty darn close. And now we're kind of in no man's land, trying to see which way can they go up. Are they going to roll over? And so it's not a high probability pattern, but for intraday trading, we'll just see where this goes one way or the other. If it gets through here, if this turns into a bottoming tail bar, by the end of the day, the assumption will be that it's going up. But right now, flip your best market coin and see what happens. Same story here, got support there. Now this is overhead resistance. So we've got a trading range going on. Commission generator, I call these, frog in the blender pattern. Don't get aggressive here. Intraday trading is different, but we just don't have high probability swing trading setups here as it relates to the markets. That doesn't mean there aren't individual stocks, but if the markets are going to chop around, you're not going to find that many stocks that are on their own page. You do find them, but when the markets are moving in one direction together, even junk tends to move, so to speak. Whereas the best stocks move even faster, and we don't have that scenario right now. So same story, waiting to see what happens here as they trade within that reversal bar. Well, the reversal was here, and then as it went higher on the continued positive reaction to the reversal. Same story with the Dow, support. Now we've got new overhead resistance, same weekly chart, big range expansion. And so it's the best thing you can take away from this morning's pre-market analysis is just to go slow and wait for your good setups. If you're an intraday trader, we'll find something. And from a swing trading perspective, it's going to be more difficult. Really as simple as that. The Russell, as we looked at here, came all the way down to the June low. So we've got here a giant, messy trading range, and it's in the middle of the range here. And Thursday's high and low is the same story. So trendless with uncertainty and just crazy price action, where traders or investors, hedge funds, whatever, are getting slapped one way, and as their head flips in that direction, they get slapped back in the other way, and it's what we're trying to avoid. Oil, that went down when bonds soared higher, and they certainly look like they're going to go higher. So that's something to keep an eye on today to see if this exhaustion gap that got, this is TBT, the inverse of bond prices, and got them to stabilize. If this begins to roll over, and you can see they're a little weaker here this morning, if you get TBT rolling down and you got oil, it's not going down here, it's actually holding up. But if that starts to drop, the markets are likely to follow. The equity markets are likely to follow. So bonds going up here, pushing yields a little bit lower, and prices getting closer to that ominous yield curve inversion of the shortest versus the longest. The others, the shortest versus the medium to 10-year, are already inverted, and this one is inching down toward the zero line, which is the 13-week versus the 30-year. And so gold continues to do well. Looks like it's going to go higher. We've been talking about that since this breakout occurred several weeks ago. That looks great. Silver kind of consolidating here. It's probably the next place to jump on board long, as this is likely to follow gold and then go higher. Was there an M top and IWM? That looks more like a pattern that just displays insanity to me, Lou. I guess maybe you could make that into an M top, but M tops and W bottoms historically are much cleaner patterns, where this is just chop and overlapping bars and tails. And it might go down as one of the greatest fake out patterns that I've seen in a long, long time. While it was still messy, the dip under the lows here, and then the wide range bar up, and then what Dan refers to as a bear sandwich with the red bar followed by a green bar all the way back up, which was suggesting it was going to go higher, and then the gap down that was totally negated and it traded above, and then the collapse. It's like, if you're new to the markets and didn't have a trading plan and money management, you probably blew your brains out, or your account was destroyed if you tried trading that. So, and if you survived it, even if you lost some money, put it in your scrapbook and just recognize it as just being a point in time in the markets where there's such uncertainty about what's going to happen with these trade tariffs and the nonsense that goes on in Washington. It's a pretty unique time in the markets. And, as long as I've been doing this, and you tend to forget the histories, except for some really, I guess, outrageous kind of movements that have happened. But I think this kind of, I've seen choppy markets before, but, the news that's driving this in such a violent way, I think it's a bit unusual historically. Anyway, so, and to boot, you've got currencies, some of the currencies just collapsing. And just look at the British pound here. It's coming down to this long-term support. But look at where this was. I mean, and so now will it stop here? And so there's a lot of turmoil going on around the world here. The euro it bounced up here from this low, but if it doesn't hold this and that drops, there's a lot of moving parts to be keeping an eye on. And when I say that, I don't mean you have to watch it, but it's good to set alerts to be aware if certain markets begin to deteriorate or if there's improvement. And then you get that alert and you go back, to your analysis, because especially as an intraday trader, there's a lot of things that you're watching and you can't watch them all. You'll just, get overwhelmed with too much information. But anyway, so, the big drop last week, the recovery, was it just a technical bounce? Was it something real? You've got, Thailand, India, and New Zealand cut interest rates. The Fed sitting on their hands, trying to, I guess, play chicken and not blink. And so, you never know whether they'll come in at any moment in time if things get kind of ugly. So, but damage being done, even, technology broke down, internet came down pretty hard. So it is what it is. We'll see what develops over the coming week, and we'll update as we get more information. All yours, Dan.
All right, thanks. Good morning, everyone. Yeah, talking about turmoil in the world, I was reading the journal this morning, and like for the first time in a while, I'm thinking this is not a joy to read. Everything was problems all over the world and rioting, and so there is a lot going on. All right, let's look at opens real quick. We only have 2 of them in the weekly options trader. We're very light, but we actually had a good week other than Millennium here, put spread, Dollar General. Retail got whacked on Friday afternoon. This one's gapping down a little bit, but we have way out of the money put spread for Friday. And other than, I discussed it in detail in the weekend video. Other than this one stopping us out along with the VXX, we actually had a very good week. In the weekly options trader, AYX were short naked puts. Casey, and I did a lot of covered calls because of the market mess. SIBO covered call, CVS covered call, and these things are gapping down a little bit, but as Greg said, even though the market's a mess, we've been finding fantastic individual things. So sure, it's down a little bit, but that's exactly why we have a covered call. On Dish, gapping down, that's actually gapping under our stop. 30.50, how far did that go? Oh, that was a bearish gap this morning. So we'll just use our 5-minute rule on that. That was a climactic buy setup. And our target on these is usually the 20 or a third retracement of this, and it didn't do it. It's still weak. EIX, we're long stock, but I have instructions to leg into a covered call. Same with Millennium. Overstock was our beautiful bullish trade of the day on Friday. We have a put spread and a covered call. Urban, we're short stock and had a nice, just waterfall day here, weak retail. WW, we have a covered call. Again, gapping down a little bit, but relative strength. And finally, ZTS, covered call. There you have it. So other than that dish, looks like everything we have is fine. Let's look at some gappers here. C blocks, McGraw gave me this, and I said, yeah, it's strong. Let's keep an eye on it. That would be an ideal 1, 2, 3. Crowd's not really a gapper. I just have it on my list as a possible put spread for Friday. McGraw, you gave me this one. Beautiful, beautiful 15-minute chart here and daily. Yeah, this looks, it's not a gapper. QTWO, never heard of it. Putting that in a window. Looks great. Look at Roku here. Look at that big old gap last Thursday. And now that's relative strength. Again, look at this 15-minute chart. That is a picture of strength. That's impressive. Amgen was on fire into the close on Friday, and now it's actually up in a weak market, relative strength. Fox, a bear 1, 2, 3, but you know, target's not real big. 34 bucks will be my target. SBAC, beautiful breakout on Thursday. McGraw, you gave that to me over the weekend. Strong, let's watch it. AIZ, another strong one. Let us see if it can go sideways. ETR, I like this over Friday's high, because then it already broke out, but then it'll be topping tail ignored. LMT is strong, but it needs to pull back. Trader, big. Yeah, there's a, you know, when we did our scanning Friday afternoon, there's a lot of weak retail. Yeah, big looks lower. Look, JWN. Walmart, that's a bear flag right there. There's my flagpole, and there's my 30-degree flag. But it's a buy setup on the weekly. So, you know, they aren't in agreement. CTOS, we've said Friday, if it takes out today's high, I like it. Put spread. APA it's a weak oil. GPS here, maybe under last week's low. It's bearish, daily, weekly, monthly. MAC is just grinding lower. You know, that's just getting on a moving train. That's weak. ANET is weak. Look at that. You can short Friday's low. Stop Thursday's high. Here's some other retailers that are weak. We found Ralph Lauren. Whirlpool is a call spread candidate. Old Sherwin-Williams, though, is a beast. Friday's high, I like it. PVH is a continuation short. Look at that. Look at that late day breakdown there. Beautiful. BWA is weak. Beyond, we talked about. The short under last week's low. FBM is a 1, 2, 3 over the highs. Seco is strong, but we have no entry. KTB is a 1, 2, 3. STE is strong, and it all started from this gap. And we said if it could go sideways here at resistance, and it's still worth watching. Jack, we talked about. It was a 1, 2, 3 when I mentioned it on Friday morning. NTRA, I'm not chasing, but that's a beast. Switch is a beast. Oh, look at that beautiful 15-minute chart. Wow. I gotta put that in my scrapbook. Oh, that's this Thursday. This Thursday. Wow, you have like almost 3 of them here. Is late day breakouts and breakdowns. Let me grab this screenshot. Pretty. That is a pretty chart. Those are some serious caps. Argentina stocks. Evan, do you have any nice liquid patterns that you like? Oh, those are all Argentina? And let's see, Trader asked me about TUFN. Yeah, it's a weak dog. I mean, your ideal no-brainer entry was right here. So it's just getting on board a moving train. It's approaching its IPO price, though, on the monthly. Lisa's got killed. Yeah, I mean, we've looked. You know what? We were going to do a put spread on Mealy, but it was too spready. I remember that. And you know, that's trading. That's a bear island reversal right now. Yeah, I saw G Gal earlier. It's in my list somewhere. Wow, that is an ugly, ugly gap. Look at that, over 50%. What's going on in Argentina? I mean, other than what's been going on. Wow, Evan, you are not kidding. Oh, the election. So what's the political significance of what they don't like? Can you just give me a Cliff Note version? Oh, okay, socialist one then. Those are amazing damage. You're right. Wow, look at them beyond actually holding here, relative strength.